Good morning and welcome everyone to another episode of Daily Rates Live with the Mortgage Calculator. I'm the president of the Mortgage Calculator. We are a lender and broker that operates in over 20 states with over 100 loan officers that would be happy to help you out for anything we go over today. But as we do every day, we'll check out the general market for all of our standard programs, and then we'll go into a deep dive, typically into one of our specialties. Here at the Mortgage Calculator, we love to offer some of our non-QM options that are typically a little bit outside the box and unique programs, and we especially like to highlight those today. And that's what we'll be going over for anybody that unfortunately experienced a foreclosure event or other similar event. Very similar. We're going to use foreclosure in this example today, but other credit events such as deed in lieu of foreclosure and other housing credit history events in a similar fashion here. So we'll go over the standard options and then explore our non-QM options, which are unique. So let me go ahead and get started with the show today. So again, if you want to get a full breakdown, a full itemized loan estimate with all of the fees and the full APR for your exact scenario, please visit our website. We connect you with a licensed loan officer. Let me switch my screen here. And we first want to pull up just the general. So you see here, this is the 10-year Treasury over the last 5-day period. Slowly moving up. Some news in the markets, a lot of movement there. But this happens on a daily basis. I definitely always love to put it into perspective for all our borrowers. The 10-year Treasury is one of the best indicators for all our different programs. So it's a great indicator overall. Obviously, there are specific indexes that are better off for certain products. But if we pull this up to the last year, we can see we are still pretty much at 1-year lows here. So definitely still a great time to be out there shopping. Some good news from the markets here in the next few days. And now let's check out our. Let me actually refresh this now that we're doing. So all of our standard programs here are live with the latest pricing here. And we always pull up a standard scenario so we can compare across all the different programs in one. And we always pull up a standard single family home, 500,000 purchase in these examples here, 300,000 loan amount, corresponds 60% loan to value, 765. So obviously these are very high numbers. That way we can compare every single over 20 programs here listed on this page. We obviously need those settings. Here for conventional primary, typically what most people think of when they think of a mortgage, using a loan option, comes in today at 5.875, lowest 6.135 with all of the fees included there. And for our borrowers that may not qualify for it, we typically want to present an FHA option as well, or leniency on credit issues and a higher overall debt to income ratio, and does require upfront yearly mortgage insurance. FHA comes in today for this scenario 5.2 APR, 6.137, just a touch higher than conventional, with all of the fees included there. So sometimes they're a little bit different. Our VA eligible borrowers are active service members, vets, and surviving spouses here. If you are eligible, these programs are amazing. Rates today come in at 5.375, but with all the fees here for VA, comes in at 5.627 final APR. So when we compare that to FHA and conventional, definitely typically the best option for our VA borrowers. And for our borrowers that are looking in those rural areas of the country, definitely a great option to compare. So if our borrower income-wise and the property is in one of those USDA eligible areas, these are great options here. USDA coming in at 5.125 today, final APR 5.802. And now we get into some of our favorite options, our non-QM options. First up here are option for a primary home. So for our conventional FHA, VA, USDA, any of these options, we typically want to present a non-QM alt doc option. Most of our self-employed borrowers may need to use to qualify for the loan, such as bank statements, 1099s, etc. And you see here, we'll compare that to conventional option. So if they can't go conventional, our alt doc option for a primary home, 5.875 rate, same rate. Final APR 6.145, so just a touch there for non-QM, which is amazing. Alt doc for our investment properties as well. Final rate here today, 6%. Final APR 0.321. And conventional options for an investment property, Final rate today here, 6% flat, APR 6.11, so just a touch cheaper than Alt-Doc. Our favorite options here are DSCR loans, stands for debt service coverage ratio, no income or employment is used. We simply use from the investment property here in this scenario to cover the expenses here. So if the estimated rent IA of the mortgage payment, that's our DSCR ratio of 1 or above, used for all these examples. And first example penalty, standard for these investor loans, 5.99 rate. Final APR, 6.258. We can add a 5-year prepayment penalty to the rate typically. Actually, today's rate is the same, 5.99. But notice the cost is a little bit cheaper there when we add the 5-year prepayment. APR comes in at 6.222. And we do have options for no prepayment penalty there. So final rate for that option comes in at 6% if our investor does, or the state may not allow it in some cases. Final APR 321, very comparable to conventional. So typically our investors may choose this option still. And we have a ton of programs. Again, please get with one of our licensed loan officers that be any of these unique options that we offer. But today we're going to go into our alternative options. So if our borrower hasn't experienced a foreclosure event, again, as I said at the start of the show, a foreclosure event is a event. So other housing history events are treated similarly. Deed in lieu of foreclosure, forbearance, some of these other events. But foreclosure is the most common and the big one. So that's what we use today. So if our borrowers, unfortunately, I'm going to compare the different options for them to get back into the market. We need to identify a property. We'll use the same one as the last property was eligible for all the different programs. So here we have an exact scenario for an exact property, so we can use it for an exact example. Or wants to purchase this property that is actually nearby. And to use conventional, which is typically the first option. Notice here, it's not I have here in the notes. Conventional options require 7 years of foreclosure season before we can proceed. So it's just basically written. So this is a standard conventional 5% down quote, what most borrowers would want to see when they think of a conventional loan. And we just need to note that this requires 7 years of seasoning, which is some of the highest. So definitely we want to explore other options typically for our borrowers at less than 7 years. So this is our lowest rate option, 5.75 for 2.5 discount points in cost. And we have our par rate or zero cost option for 6.49 in this example here. And we were using all those same setups, 765 go, etc. Now for our a more recent event, a little more leniency. So here in the notes, you can see FHA requires a 3-year waiting period before we can offer an FHA option. So if our borrower has, we could offer this option, standard 3.5% down here, 5.375, lowest 1.853 discount points, and our 6% rate option actually affords a little bit of lender credit there, 0.983 towards closing costs. So FHA option here, the typical FHA requested down payment requires 3 years, as we went over. And our final standard quote unquote option here, I want to explore the things for our eligible vets. Eligible veterans have a little bit more leniency there. There is a 2-year wait period after events for a VA loan. So this is a simple VA rate option costing 2.423 and a 5.99 rate option. This 6% rate option is a little better at point. And this is a 100% LTV purchase, so 0% down payment for our eligible vet. And now the very unique option. So typically most of our borrowers will already know a lot of that information, which is pretty public out there. If you just search the internet, different waiting periods that are required for the standard loan programs. But if our borrower doesn't qualify for VA and has less than 3 years, there are no standard. That's where we love to present our options. So first up here, probably the more standard option here, we have our non-standard 10% down. So that's the lowest down payment we can do for our non-QM options, and that has no PMI, which is amazing. And that's for a primary home, of course, for that exact home. And this is going 2+ years after foreclosure. So more than 24 months after foreclosure in this example. And we have options for less, but let's look at this amazing option here. So if we actually record that foreclosure event, we can actually start a loan using this non-QM program. This is a full docket, even use bank statements, etc. And the rate today coming at 8.75, so a little bit higher rate, obviously. Discount points there, 1.875 in cost. This is 10% down for that exact home, 90% LTV, no PMI required, and that is going to have a 760 credit score in this example. We want to make sure we got the highest LTV option. Of course, most of our borrowers that have experienced an unfortunate event struggle to get that score back up. Hopefully that will be, but the challenge of finding a program, we do have those programs available. Now let's check out for a borrower with less than 2. This is where it starts to get a little bit more hairy here. So once we get into this realm, I did a couple options for 10% down payment. On the price was too high to present here in a realistic scenario. Perhaps if we had a bunch of seller credits, we could something similar, but we can't just come right out and quote it. But if we set a 15% down payment or 85 loan to value, we do have options that pull up for plus year post foreclosure, so 13 months or more. And you see here the lowest rate option, 7.99, actually a little bit lower rate, a little bit more down payment, and the discount points there, 1.875 in discount. And notice that has a little bit more down payment required. 760 credit score might be a little bit hard to attain, but this is an example scenario for our borrowers that need that little extra help. Now, the most unique option that took me a little bit while to put together here are event options for under 1 year after foreclosure. So this is very, and I had to dig through, and I did for the best option that we have today. Pretty unique. As long as our borrower is able to put 30% down payment, we're able to get pricing options here for a primary home, of course, with under 1 year post foreclosure events. And the rate here, because we put a lot more down payment, it actually is a better rate, 7.375 rate, costing 5 discount points of cost. But our borrower does need to come up with a hefty down. Hopefully that's possible. We love to make these. And again, probably the biggest challenge for the borrower will be able to get that credit score up. If the credit score lower because of credit issues, much more of a challenge. So for our borrowers out there that have experienced these unfortunate events, we do have options. Please get with some of our, they'd be happy to explore all the different exact options for your exact scenario. We love to, again, offer those unique solutions. Any questions here on the live event today? We'll see you back to more unique options that we have for other that may come up. So we'll see you, everybody.